Hi everybody, Jim Crawford here with Better Homes and Gardens Real Estate. I'm here with Ryan Richardson of Movement Mortgage. How are you?
Good, how's it going?
Fine, thank you. Thanks for joining us for a few minutes. We want to talk about a few items that have come up recently as far as mortgages go.
Yeah.
So, first one would be kind of what is the minimum qualifications, right? People will always have this idea of what they need or don't need.
Yeah.
Give us a rundown of just the general qualifications to get through that pre-approval process.
Yeah, so the biggest three things are income, assets, and liabilities. Those are our three biggies, right? Liabilities, I'm basically just going to get from pulling your credit report. Credit, there's a minimum score requirement. It depends, but obviously the lower your score, you have to make it up in other buckets, other places. So you can go down to 580 on an FHA loan, but if you're a 580 credit score, you have to have solid income, solid assets, like other pieces. Conventional, you could go down to 640, but with COVID and everything, it's gotten a little bit stricter. So those are technically, I guess, maybe the bottom thresholds, but it's not necessarily an end-all, be-all. If you get over that number, you're automatically going to get an approval. So, but obviously, the higher you can get your credit score, the better you're always going to be.
Sure.
Assets, pretty straightforward. You have to put down a minimum of 3.5%. Most people have this idea of 20%, but that is not true. That's kind of an old, our grandparents taught us that, and they taught our parents, and it kind of trickled down. So if you can buy something with as little as 3.5% to 5% down, some programs are 100% financing too. Especially a VA program. If you're a veteran, that's a fantastic program.
Absolutely, and I know also you think about 3.5% minimum as far as the down payment goes, and then roughly 5% of the purchase price of the home for closing costs.
Closing costs, yeah, especially first-time home buyers. That's a big. I ask people, like, how much money do you have available total? And they're like, 20 grand. I'm like, how much do you want to put down? They're like, 20 grand. I'm like, well, we have this whole other bucket of closing costs that we got to talk about. So that's something just to be prepared, especially in this environment. Like, you're going to be paying full boat on anything. And then income is the biggest piece. So the biggest thing for us is stable and consistent. We want to be able to show you have the ability to repay the loan.
Makes sense.
So that's kind of the hardest part right now, especially with COVID. A lot of people, especially hourly employees, like their hours got cut, their salary got cut. So the government regulates all these loans, and they're very particular about stable and consistent. So it's a very tricky calculation sometimes. So that's why I'd always recommend you just talk to somebody like me that can actually do the calculations and give you a solid idea of what you can and can't do.
Sure, and that process is a simple online form that gathers all that information. You may ask for some uploads along the way, but really it's not complicated to get you the info that you need to be able to make your decision one way or the other.
Yeah, most times just pay stubs. I could do it. Self-employed borrowers is a little bit different because you have different ways of recording your income, but it's pretty easy.
How about as far as rates go? They're not as good as they were a few months ago, but they're better than they have been in a very long time. What's the prognosis as far as how long that lasts?
Yeah, so interest rates, we were at all-time historic lows around Valentine's Day this year. So it was the lowest rates had ever been. We were quoting people like in the 2% range. Those days are over. They don't exist anymore. Rates are on the way up. So the rates are kind of based on the 30-year mortgage-backed security bond market and the 10-year treasury market. So it's kind of a mix of the bond market. But the idea is that if I own 30-year mortgages and someone's making their payment every month and their payment's $1,000, if that $1,000 is worth $1,000 today and inflation goes up in 10 years, that $1,000 may only be worth $900. So as an investor, people that buy these bonds, they're looking at the 30-year long term. So they're looking at now that things are costing more, lumber's costing more, there's global shortages on everything, the cost of everything is going up. So if they're going to invest in something for the next 30 years, they're going to want a better return now to make up for that over the 30 years. So interest rates are on their way up. They're still dirt cheap. I mean, you're still at the low 3s to 4% range. Historically, over the last 50 years, interest rates on average are 7 to 8%, which if you bought your house in the 80s and you had a 15% interest rate, So they're still historically low, but they are on their way back up.
Yeah, and one of the things that folks don't consider is they are thinking about waiting out the price situation on a home right now, but it's going to flip the other way, and essentially you wait out the price situation and your rate goes up, you end up spending more than if you bought the expensive house today with the lower rate.
Yeah.
And there's calculators online that you can actually look at that kind of stuff to see, hey, if I do it today at 3.5% for $400,000 versus 2 months from now at 375, but a higher interest rate, you can see how there's a point where it washes out and a point where you end up spending more rather than less.
Yeah, I think people focus too much on an interest rate. Everyone always wants, you got to get the best rate, you want the lowest rate. Like, the best rate may not be the best thing for you. There's different things you can do with it. It's all based on the stock market. So an eighth difference in interest rate might be $20 in monthly payment. So if the payment makes sense for you, that's kind of the thing that I like to focus on the most. Like, you could drive yourself going mad getting every online lender to give you a quote and try and find the lowest possible rate, but tomorrow it could change again. So it's all based on the stock market. Ebbs and flows with the stock market the same. So It's not necessarily the most important thing. Yeah, it's important, but if you're working with someone that's reputable and is a big company and knows what they're doing, like, you're going to get a competitive rate.
Sure. On that note, tell us a little bit about Movement Mortgage and kind of how they're different than the other folks that are out there.
Yeah, so Movement, we're a top 5 lender in the country. There's 2 main ways really that we're different. One is the mortgage process itself. So every mortgage company has the same government rule book that we all have to abide by. And they're what we call guidelines. So if the government says we want 2 pay stubs, like that says what we want, that's what Movement does. So we write to the guidelines is the industry way of saying it.
Sure.
Other lenders would do what we call overlays. So if it says 2 pay stubs, they'd be like, well, no, we want 4 pay stubs. Now those 2 extra pay stubs could show something that the other 2 didn't, which now kind of opens up a Pandora's box, which kind of changes things.
Sure.
So we only write directly to the government rule book, and then also we send to the decision maker up front. So I don't get to decide if you get a loan or not. That's up to an underwriter, and that's how every mortgage company works. So what we do is we submit to the underwriter up front so they can make an initial decision. So if there are any hurdles or obstacles, we know usually within the first day or 2 of getting a contract. Most other lenders, the way they work is the underwriter doesn't see the file until a week or 2 before closing. So you have the actual person that's making the decision that doesn't actually make the decision or see the file until 2 weeks before closing, and this is when you run all these last minute issues.
That's a problem.
So that's a really big difference for us. I would rather deliver you a hard truth and tell you within the first 48 hours we have a problem than waiting 3 weeks, getting an appraisal, spending money on inspections and doing all those other things, and then all of a sudden going, hey, no, we can't do this. We got to yank it from you. So,
absolutely.
And you're messing with people's lives, and people are moving into homes and picking up everything that they own and moving into another location.
Absolutely.
So it's a big deal. So the mortgage process, we're different all the way, and then culture, we're very, very different. I've worked in financial services ever since college. I've never seen a company with such a strong corporate culture. So our mission statement is to love and value people. So we're 45% owned by a nonprofit, so everything we make past break even gets reinvested back into the communities that we serve in. We donated $200 million to charity last year, which is crazy. I mean, it's majority of our profit because our 2 CEOs have decided they don't need to be taking dividends and shares out of the business. Like, everything just gets reinvested back into the communities. We have our corporate headquarters outside Charlotte. We have, I think, 2 charter schools down there now. We partnered with LeBron James to build some more charter schools. So we're kind of building that up, and we put people first. So yeah, profit matters because the profit helps funnel us to be able to do that, but we're not solely focused on the profit. We're almost every big bank and everybody else is, they're just looking at the dollars, the bottom line.
Sure.
So we partner, I mean, we've gotten noticed like USO, we just had a huge partnership with them.
That's fantastic. Yeah.
We're going to be helping transition military members out into civilian life, helping them go through the VA loan program, which is fantastic, getting them into homes, and then we're also looking to hire a lot of them too, to bring them from over into civilian life and then kind of plug them into the movement culture. So the culture thing is just, it's amazing. Like, it's very refreshing. I get recruiting calls all the time and I was like, I would never leave. Like, you don't have a corporate culture like this.
Sure. Yeah, the USO part of things is fantastic. As a former military member myself, greatly appreciated. That's a fantastic organization, and the 2 together is a perfect match. It really is. If we can help with your VA loan, by the way, let us know. Ryan and I can help get you through that process for sure.
Yeah.
Anything else that you want to mention coming up, promote, anything of interest for the future?
No, I think we just have some cool stuff going at the office, especially in Phoenixville. Like, a lot of the downtown events have gotten canceled. So like we have the
rescue event coming up.
The rescue event, yeah, thank you. Yeah, that's coming up. So just a lot of cool stuff like that. So just keep an eye on Facebook. If you follow either one of us. I have a lot of funny memes, but there are some other cool information in there too, that's
Absolutely.
useful. So, but yeah.
Yeah. Well, thanks so much for spending some time. Greatly appreciated.
Yeah, cool. Thanks, Jim.
Thanks.